the sustainable investment market has gone from one that was perhaps a niche 10 years ago to now being a conversation that most people discuss when they're looking at portfolios, looking at stocks, and actually talking to fund managers. So very pleased to be joined by Peter Michaelis from Liontrust, who, along with his colleagues, is probably one of the longest serving and most experienced managers in the sustainable or responsible investing arena. Peter, really good to see you. I don't want to age you too much because I think I've done that in other interviews. But you and the team have been, originally the sort of portfolios, the sustainable funds portfolios have been going. It's 20 years next year, isn't it? In 2021. So you've seen a lot of stuff with the team. So let's talk through some of that. But currently, what are the sort of, I know there's always sort of 3 or 4 major themes that you sort of think about over a cycle. What are the ones you're looking at the moment?
Well, we're looking at energy, and what's happening with energy, particularly the move away from fossil fuels. That is seeing an acceleration as the costs of wind and solar come down. We're looking at transport as well, driven by climate change, but also particularly air pollution in cities, which people are realizing more and more is connected to lung disease and lung problems. And to that end, that leads us to companies involved in, like Umicore, involved in the materials that go into batteries. And we're looking at renewable wind turbine producers like Siemens Gamesa or Ørsted, who is a big investor in offshore wind. And they're all seeing great growth, and we think they're well positioned for the future. Elsewhere, our strategy is not just about the environment; it's also about living healthy, fulfilled lives. One aspect is around health, particularly of kids, young kids. And one of the companies we really like in our global fund is called PerkinElmer. And they do the diagnostic testing. When a kid's born, they take a sample of blood and they test it, and they screen it for a couple of dozen different markers. And that's a fantastic advance in understanding immediately, very, very quickly, what your baby could be susceptible to, or whether it's got a totally clean bill of health. So those are 2 examples.
Yeah, and I think and just sort of feeding on from that. So they're very long-term themes, aren't they? I mean, some themes that I hear about in this sector kind of move on very, very quickly. I mean, if we'd had this conversation sort of 10 years ago, you would have probably talked about Ørsted and kind of wind power. That's moved on to now not perhaps being seen quite as risky as it was a decade ago. But it strikes me it's really very interesting you're talking about sort of child mortality there, whether it's a developed country or clearly a developing country. These are still issues, and there are solutions coming to some of these issues in all over the world.
It's exactly right. And these are long-term themes, which mean that companies exposed to them should see growth for many, many years to come. And we sort of think the story of reducing child mortality which is kids dying before the age of 5, is done. But even this century, so since the year 2000 in the UK, we've managed to improve that rate by 40%. So, advances in vaccines, advances in diagnostics, I was talking about, and general better understanding of treatment of young kids has led to these improvements, and obviously 0 is the target. So it is important, because for us as a strategy, that means we have to worry less about where are we in the economic cycle, and is China destocking its inventory or not. That we don't worry about. We just worry about these long-term trends and finding the best companies exposed.
And I guess air pollution is exactly the same. We're sitting in London, and while air pollution might be, significantly better than China's, to use an example, it's still a challenge in both countries, isn't it? And one that affects everybody's health.
Definitely, and maybe it was tolerated 30 years ago when people didn't realise just how insidious it was having these levels of air pollution. But now, again, the target people want is 0. You want 0 particulates, 0 SOxes and NOxes, and the way to get that is now clear. And you've seen city after city saying, end to diesel, end to internal combustion engine, and having a clear signpost for that. And that move to electric and other forms of transport is going to happen. no question.
And I was sort of fascinated, somebody was telling me about that piece of research about how polluted the London Underground is actually, which when you think about it, it's incredibly deep. You know, you and I probably travel around it quite regularly. Again, a place that, you know, is full of kind of air pollution kind of issues. So again, as a theme, it's not just related to cities and cars and aeroplanes. There are other places within the economy that have got air pollution issues.
Yeah, you know, mass transport
Yes.
systems also have to be clean and keep the people within them healthy and happy. That's why you've got to get on your bike.
I'll probably fall off mine, which takes me on to road accidents, which I know again is a sort of theme that you've been sort of talking about kind of more recently. What are you looking at there when you're talking about road accidents?
Well, that comes into our view that economies work to become safer as well, and you can see it in road accident trends, but also accidents at work.
Right.
You know, the stat is that bloody health and safety
Yes.
saved 400,000 people from having serious accidents last year from 10 years before, if you see what I mean.
Yes.
So the rate has been phenomenal in terms of improvement. But when we're looking at road accidents, we're looking for those companies involved in, you know, the airbags, the sort of all those sensors that make your car stop and not have the accident in the first place. Hella is a German company that produces headlamps, which you think would be quite low tech, but they're actually becoming much more sophisticated. LEDs, and they can now control themselves, be controlled so that they will highlight sort of cyclist that's maybe not, you know, visible otherwise, and things like that. So making our transport system safer is a really important theme.
Now, you sort of mentioned wind turbines sort of earlier. Are there, to your mind, any at the moment, any kind of asset classes within the sustainability sort of spectrum that look like they're sort of getting towards kind of bubble type status? I'm thinking of waste management. A lot of professional investors I talk to have got portfolios exposed to areas like waste management. You know, I think we've been through one or two cycles with some of the wind turbine businesses, you know, the last sort of 10, 12 years. Are there any themes or areas that look a bit hot, a bit bubble-like from a valuation perspective?
I get asked this quite regularly about, you know, are sustainable stocks overowned?
Yeah, exactly.
I think that, you know, a definition of a bubble is when an irrational valuation is being applied to the future profits of a set of companies or a sector, and we just don't see that. We, you know, within us, there are clearly going to be some companies that won't deliver the profits that the market's expecting. You know, that's just, you know, how the future develops. But broadly, the valuations of the companies we're looking at are, you know, really appropriate for the potential growth that they're going to see in the future. So I don't, you know, I don't see that at all. And certainly when we're looking at the companies we're invested in, we don't look at the share register and think, oh God, it's full of sustainable investors. Right. It's full of, you know, lots of other investors as well. So I don't see that bubble situation appearing. Obviously, this might come back to haunt me, but to our mind, and that's why we're so disciplined about valuation. I think what you're alluding to when it was the solar and the wind is back in 2007, you had a lot of European companies involved in producing photovoltaics. You know, they had great growth. It was a fantastic sustainability story. The thing that was wrong with them was not so much valuation, it was the barriers to entry. And there was a market that was suddenly, you know, China looked at it and thought, hang on, we can produce this. We throw a lot of cheap capital at it, build enormous plants, blow them out of the water, and that's had a great effect in lowering the price of solar electricity. But for those, you know, German and Norwegian solar cell manufacturers, it was a disaster. So it was less bubble than a weak business model, I would say.
Got you, and hence why you've got solar panels at home, because it makes more sense nowadays.
I mean, it's
it wouldn't necessarily.
It's an obvious financial decision, let alone how it makes you feel in terms of having greener electricity.
And you've, you know, sort of touched on one of the kind of sort of notable points in the last sort of 20 or so years. What are the other sort of key landmarks when you kind of look back at the things that you think actually whether it is, even if it was in itself a very negative event, it has helped kind of move the discussion sort of forward. It feels like, we've had Dieselgate and Macondo.
Yeah. So those are two on the negative side. I think on the positive side, if we look back all the way to 2001, you had that first IPCC report, which said that the link between anthropogenic emissions and climate change was almost certain.
Yes.
So that was a state of play there. So to us, that ended the debate about climate change. So that was, if you like, quite enlightening, and that carries on to Paris, the Paris Agreement, which I think is another step change in terms of thinking and understanding of mechanisms of climate change, and then our need to do something about it. Also within investment, you had the Stern report, which I believe came out in 2006, which basically showed that the costs of action now were much less than the costs of delay and hoping someone would solve it many years into the future. You also, in that same year, had the PRI, the Principles for Responsible Investment. And that, it's been criticised for being kind of quite a weak set of principles, but it's had, I think, a really important effect in making the whole asset management industry and their clients understand that integrating sustainability into your investment decisions is not just a good thing to do, it's a sensible thing to do from an investment point of view. So those would be my landmarks.
And how do you look back at some of the disasters or the negative events that have happened? Longer term, do you think
disaster in terms of the Macondos or the Dieselgates?
Yeah, exactly. Do you think
financial crisis?
Financial crisis. Yeah, good point. Good point. It's hard to suggest there was anything positive that came out of the financial crisis. Maybe it did, but with those, individual events, do you feel that perhaps that's helped the move towards electric cars, for example, with Dieselgate, or cleaner, car solutions?
Definitely, but I think the humans, as opposed to the rest of other animals, we have hopefully the gift of foresight that we can develop our understanding of what is likely to happen in the future, and where that's unpleasant, you find a way to move away from it. Now, sometimes that we have to stare into the abyss before we actually take action, but so I'm hopeful that these little sort of accidents and disasters are what's needed to sort of prod us to move, and that we don't need huge cataclysms. Mind you, looking at the bushfires in Australia, you might think that we're already there, but I do think now the science is becoming so strong, and the solutions are there. It's that quote that the future's here, it's just not widely distributed yet. And whereas 15 years ago, it was quite hard to sort of say, okay, we're going to convert our entire energy system to renewables. Now that's entirely plausible. Even with today's technology in renewables and batteries, you could do it and it wouldn't affect, it wouldn't cost that much more than Hinkley Point C, for instance, which we've happily gone off and built. So I'm optimistic that we're going to change in time before we need major disasters to make us react.
Now, principles over performance, you must have been asked this sort of countless times. I give up performance for my principles. Is that debate gone away, or are you still being asked that question, other than me asking it now, clearly?
The debate hasn't gone away, and it's always going to be asked. But interestingly, I think the question has flipped around now to being, will these sustainable investment funds be able to maintain their outperformance?
Right.
So we run a range of funds, and over 15 years, we've outperformed the mainstream average fund. Yeah. So in the last 5 years, every single one of them is top quartile. Yeah. And not just blowing our own trumpet, because when we look at who else is in that realm of delivering, I want to say sustainable returns, but regular outperformance, it's other sustainable investors. We see Roll London up there, we see Henderson's, and their sustainable strategies are there as well. So for us, the question is right the other way around. There was also an interesting piece put out by Grantham Research, or GMO, where they basically did that, and they looked back over the last 50 years, and they said, if you stopped investing in oil, stopped investing in tobacco, what difference would it make to your returns if you invested in an index? And it's precisely zero. Yeah, no difference at all. Because so for those people who fear sort of missing out on certain sectors' performance, there is no evidence.
Yes.
And then if you look at the performance of active, sustainable investment funds, there's such a growing body of evidence through performance that I think that question about profit through principles is the wrong way round. Okay. And now it should be like, well, why do they continue to outperform is more of the question.
So again, another expression question you may have been asked before, but I've heard people say sustainable investing, it's a bull market phenomena. Once there's a good shakeout in the market, and the kind of active managers who don't have any kind of particular sort of skew towards this will come back, and we'll go back to some kind of old world, as it were. Does sustainable investing, these companies, do they feel like bull market businesses, or?
Well, we have the benefit of having been around for nearly 20 years. And I think they've been quite an eventful 20 years in terms of markets. You've seen various flavours of boom and bust in that time. So we know how our funds perform. And the very short story is that when you get a really fast cyclical rally, we tend to lag in terms of performance. Equally, when you get an almighty crash, our funds will slightly underperform because they're not as defensive. Yeah. But those are short-lived events. And throughout stock market history, the normal state of play is gentle progress. Yeah. So we're quite comfortable on that side. And then when it comes to clients, and will they stay with us? Since we launched in 2001, every single year has been one of positive inflows and slowly improving growth, and so we've never seen that sort of like run away. So we don't buy that either.
Okay, and let's just kind of move on a bit to the fixed income markets, because obviously you have that within the range, but it just kind of strikes me that the sustainable fixed income market is there's not a huge amount of choice out there from a fund buying perspective at the moment. Why is the fixed income market? Why does it feel so less well developed?
We run about $1.5 billion in corporate bond funds with sustainability integrated into them. So it's an important part of what we do. But you're right, it should be bigger. Yeah. Because its sustainability is equally applicable to corporate bonds. It's more about protecting against unforeseen risks, so avoiding being invested in Volkswagen bonds, or seeing the volatility that a coal producer like RWE in Germany experienced. It was very positive, or GE, which also performed very badly and is a poor sustainability story. So it works in terms of delivering performance, and the long-term track record of our corporate bonds funds positive as well. Yeah. It's maybe something that is just going to slowly develop in the UK. It's certainly bigger in Europe.
I was going to say the green bond market is bigger in Europe, isn't it?
Yeah.
Less so here. I mean, again, is it that classic thing of essentially the more there are fixed income instruments that you pass a sustainability screening, the more opportunity, the greater the opportunity set.
Yeah, we don't limit ourselves just to green bonds. We find issuers in things like social housing, or companies involved in developing wind infrastructure around wind energy. So we don't have to be limited to the bond market. So there's ample opportunity out there to find really sustainable companies to lend them money through the bond market. I just think it's one of those things that will develop over time.
And just finally, we're talking about ESG, responsible investing in, as a speciality sort of form of investing, which has clearly become in the last sort of 20 years or so. How far do you think we are from a point where actually you're not being asked about how do you screen for ESG factors. It's an integral part of the way every fund manager kind of invests, unless he or she is running a fund that explicitly, I mean, I think there's one or two kind of funds in the US that are explicitly in arms and tobacco, and they call themselves that, but they're absolutely in niche. When does it become truly mainstream, I guess, is my question.
Well, I think active asset managers will always, different houses will choose different factors that they think are important.
Yeah.
And for us, the sustainable investors will always kind of major on sustainability as one of the most important factors in stock selection. So that'll always be the case. It's already becoming clear that more and more asset managers are integrating environmental, social, and governance factors to an extent. But I guess it's almost like, how do you like your coffee? How strong do you want it? And so I think that's how it's going to end up. That there will be some that say sustainability is the principal driver of outperformance, and then it'll be for clients and advisors to identify which asset manager is doing it best, which one's devoting the most resources to it, who's got the most sort of experience, track record, and does the philosophy and strategy and process add up.
Super. Well, thank you very much for coming in. Good to see you. Good to talk around the issues, and we'll pick up on these in the future, I'm sure.
Great, pleasure.
Thank you.